Welcome back, everyone. We finally got a market pullback after that beautiful light CPI report. For today's video, we're going to talk about the price action. We're going to dive into the binary event that's kicking off tomorrow, which is the PPI report, and then we'll go into some potential stock candidates for tomorrow's session. Broad weakness across the board. The S&P 500 finished down 0.85%. Our ARK Innovation ETF was today's big loser, down 3.69%. We have to keep this in context, though. Last week, the ARK Innovation ETF, for example, was up about 30% off the lows. So this is really just a minor pullback in the grand scheme. Our TLT long bond ETF barely finished down, just 0.25% on the downside, and we did get a pickup in volatility. Now, I actually prefer this ahead of the binary event, that is the PPI report, rather than the market just ripping directly into it. Our Chinese technology sector did show some nice relative strength today. It finished up 1.58%. Our MSOS cannabis ETF also showed some nice relative strength, up 0.78%, and our XLV healthcare ETF finished up 0.09%. Remember, we discussed last week that the market was stuck in this hyperinflation forever trade, and the CPI report that we got that came out light really busted that trade. A lot of shorts have capitulated out of the market, and now we don't have that same level of asymmetry in terms of all investors on one side of the boat. Typically, over the past year, when the CPI report has come in light, the PPI report has also come in light, and vice versa. But I do want to point out one nuance. As of last week, when we went over this in our Pristine Capital weekend market analysis video, the consensus forecast was for a month-over-month increase in the PPI of 0.5%. As of today, this consensus estimate actually decreased to 0.4%. So that is actually a tougher hurdle to come in lower than. I do think there is a huge risk to the market there. If this comes in hotter than expected, and now we know a lot of shorts have been blown out of their positions, what's going to happen to all of these low quality stocks that just ripped off the lows? Good question, and that is why we actually reduced some exposure today. We closed our global e-common shares for $24.33. We had paid $25.88 for this position. And this is a good example of a defensive sell. For my trading strategy, I want to make sure that my losses on common stock positions are remaining in that 6 to 8% range. This was about a 6% loss. And you can see here, the original thesis was that this stock would run after Shopify posted their strong numbers. It didn't materialize this way, and now the company has earnings coming up on November 16th. Given that I do not have a profit cushion, it would be reckless for me to hold this position into that event. So given that I wanted to reduce a little bit of exposure anyway, this was the perfect candidate to take off. And below it, we closed out some of our AEHR common shares. This is a great example of an offensive sell. We closed these common shares out for $25.02. We had paid $15.61 for about a 60% gain on those shares. This was one of my better common stock trades of the year, and it helps when you hit a nice 60% winner like this, it finances a ton of 6% losers. So that's really the key to trading. It's all about having controlled losses and then your wins being much less controlled to the upside. For most traders, they do the exact opposite, and that is why over time they don't have good results. Heading into today's session, the S&P 500 was clearly an overbought territory, and a really good way to measure that is by pulling up a 5-day EMA on your chart. The further away you are from that 5-day EMA, the more immediate short-term risk you have. The fact that we went sideways for one session, it's actually going to allow that 5-day EMA to catch up to price. So there's nothing wrong with getting some sideways consolidation. I would actually prefer it. Keep in mind, we still have this 200-day simple moving average above us, which you can use as a good upside target in case the PPI comes out light tomorrow. Our NASDAQ also had a small pullback. Given the beautiful price action we've seen over the last two trading sessions, is this really a big pullback to be worried about? Absolutely not. Take a look at this very interesting piece of news that we posted earlier in our trading room. This was written by Sam Potter of Bloomberg. Traders pump a record $658 million into a leveraged bet against tech. As the NASDAQ 100 soared late last week, Some $658 million was funneled into the ProShares Ultra Pro Short QQQ ETF, ticker SQQQ. That's the largest ever inflow for a product that aims to deliver 3 times the opposite performance of the US benchmark for major tech companies. This inflow came in on Thursday, and then there was also money that was pulled out of TQQQ, which is the bullish NASDAQ ETF. So that pretty much means that when the NASDAQ had this big candle higher on Thursday, there were a ton of investors that came in to short it. If we get a light PPI report, I think that could be the fuel that sends us up to this VPOC at 12,096.5. Our Russell 2000 also pulled back, and it closed just a smidge below that 200-day simple moving average. And our Dow Jones consolidated for the second straight session. Keep in mind, we still have that VPOC above at 34,502. Let's take a look at some interesting looking candidates if things resolve to the upside tomorrow. The first one is Frey. This is a clean energy battery company, and it's pre-revenue. So that means this company is trading purely off of sentiment and technicals. It was just announced that KKR, which is a large private equity firm, is potentially investing $500 million into this company, and it just broke out of the monthly value area. Another name we'll be looking at for tomorrow is Paramount, ticker symbol PARA. We just got some disclosures from Berkshire Hathaway, and Warren Buffett established a large position in Para. It's a very low float company, and about 15.6% of that float is short. So as of right now, it's a battle between Warren Buffett and the shorts. And which investor has had the hot hand over the past 2 years? It has definitely been Warren Buffett. I do believe that a lot of capital could end up flowing into this stock specifically just because Warren Buffett bought it. And the same thing applies for Taiwan Semiconductor. It was disclosed that Berkshire Hathaway is establishing a position in this name as well. As we zoom into the hourly chart, we can see that this stock popped after hours just on that news that Warren Buffett put in a position. As a trader, it's very easy to overthink things and believe that we have to reinvent the wheel, when to be honest, a lot of times it is as simple as targeting the companies that the world's best investor is currently investing in. Hope that helps in your preparation for tomorrow's session. In summary, the only thing that matters is the PPI report. It's going to be crucial that you have a plan in place should this number come out lighter than expected, and also have a plan if it comes out hotter than expected. With that said, best of luck tomorrow, everyone. We'll see you all next time.